Hello, fellow compounders. What do you do when the market crashes? As I'm recording this video on September 24th, 2022, the market has just had a very bad week. The Fed raised interest rates by 0.75%, the fifth increase this year, pushing Fed funds rate to around 3.25%, with more increases to come. The market dropped drastically, expecting a Fed-induced recession caused by its fight to control inflation. I suspect that all of you that are invested in the stock market are probably feeling the pain right now. In this video, I'll share with you the mindset that helps me cope with my emotions during this market downturn. And also, if you stick around, I'll tell you what I'm investing in right now in this environment. Welcome to the Always Be Compounding Club, where we share ideas on how to build, grow, and enjoy wealth. I'm your host, Dennis Chen. I'm a full-time investor and CFA charter holder. Welcome aboard. So let's get started. Yesterday, I was with my wife having breakfast and my phone kept getting notifications. My wife asked me, "What's going on? Who's texting you so much?" I said, "It's just Schwab sending me trade confirmations of limit orders that I had pre-programmed a while ago." And she said, "Why so many trades executing now?" I shrugged and said, "The market must be falling." I just kept calm. In my mind, I'm happy that the market went down because it gives us opportunities to buy good businesses on the cheap. The key to succeeding in the market downturns is to have the right mindset. Having the right mindset will keep you calm and unstressed. This will in turn allow you to take advantages of the opportunities that appear. I know, it's easy to say keep calm, don't be stressed in a market downturn. But saying and doing it, it's a different matter. It's hard. I've been invested and lived through all the downturns since the first internet bust in the early 1990s, including the 2008 market crash and the current downturn that we're living through. They've all felt bad in the moment you're living it. But the downturn has always ended at some point, and we've come out of them. So it has taken me time to master the mindset you need in order to be able to go out with your wife and have breakfast while the market is in a turmoil and stay calm. So listen up. Here's my secret. There are 4 things that I keep in mind and remind myself during a market crash. Number 1, we are business owners. We own participation in actual businesses that add value and produce profits. Our stocks are not just numbers on an electronic statement. They represent actual businesses that have intrinsic value because they can produce or are producing profits. Think about your portfolio as a collection of businesses that you own and that produce profits for you. Number 2, remember that some days Mr. Market is overly enthusiastic and sometimes he's overly pessimistic. During market downturns is when Mr. Market gives us many opportunities at the same time to buy good businesses at bargain prices because he's overly pessimistic. The price that the market gives us isn't always the real value of the business. That's why we do our homework and know the intrinsic value of the businesses or the business before buying them. We never overpay. Number 3, remember that we are rational. We can't control the timing of the downturn or recovery. All we can control is buying good businesses at bargain prices with enough margin of safety. And we do not have to sell them when Mr. Market is offering ridiculously low prices. Let the speculators and other weak investors sell to us. We can resist the urge to sell. Let me tell you a story of what happened to me. I bought a painting business in Dallas, Texas that paints house exteriors. The day right after I closed on the purchase, it starts to rain. And it rains for an entire week straight. The paint crews couldn't paint for the entire week. So in my first week as business owner of this painting business, there were no revenues. And I had the labor expense. I had to pay the crews. So obviously, the business lost money that week. With no sun in sight, just rain every day, I was feeling terrible. Did I make a bad investment? Would I sell back my business at a discount due to one rainy week? Of course not. That would be irrational because you and I know the sun will come out again and my painting crews will be able to paint. That week of lost revenues was a minor mishap, and we know that every year there are a certain number of days that we will not be able to paint due to weather. But over the entire year, the business is profitable. The same applies to the stocks we own in our portfolio. Very often in the stock market, people panic and sell their businesses at a discount when a rainy day comes along. We are rational and we will not do that. We will buy bargains, not selling them. This is the reason I know and understand every business or stock that I own. I do my research before buying them, and I don't let a little rain scare me out of a good business. And number 4, remember that we are prepared. I know this because, number 1, we own businesses that we understand with long-term competitive advantages that are led by honest and competent people and that we bought at a reasonable price. Number 2, I keep a buy list that I review weekly so I can buy bargains during market downturns. Number 3, if we don't have the cash to deploy, it doesn't really matter. We don't have to do anything. Our investment time frame is more than 10 years, so we don't need to sell at any time. We sell only if the business's long-term prospects change. And number 4, we don't depend on our investment portfolio for day-to-day living. We have 12 months of living expenses in a separate stash, which gets replenished by earnings from work. And on a side note, if I were retired, we would have at least 24 months of living expenses stashed away, which would get replenished when the markets are rising. So that's my mindset when thinking about our investment portfolio. Oh, I almost forgot. What about index ETFs? I said in a previous video that my wife is a passive investor. We own VTI, which is Vanguard's total US stock market index. Here's our thinking. Nothing to worry about. We own a piece of all the publicly traded businesses in the US, small, medium, and large. Yes, the market is falling, but the businesses in the basket are still working for us. They are adding value and producing profits. Has Apple stopped selling iPhones? Is it safe to bet that there will be a new iPhone next year? Of course. Have people stopped watching YouTube or using Google? Will people stop using electricity tomorrow? Of course not. So yes, there are ups and downs in the index, but the underlying businesses are ongoing, adding value and providing goods and services which generates profits for us. So we don't have to worry about market fluctuations. Nobody likes seeing prices go down, but they will be back. So there you have it, the money mindset that you should have to deal with a market downturn or market crash. I published a video at the beginning of the summer of 5 stocks to buy during a market crash. I suggest watching it. Here's the link. And as promised, this is what I'm buying or investing in right now. I'm buying Alphabet, symbol GOOG or GOOGL. It's a steal below $105 per share. I'm also buying Berkshire Hathaway, which is another bargain, at below $285 per share. Its symbol is BRKB. And for my coffee can portfolio, I'm buying Malibu Boats, symbol MBUU, at below $55 per share. If you haven't seen my video about growing $6,000 to $500,000 in a coffee can, I suggest you watch it. Here's the link. And if you want to compound your wealth and knowledge, subscribe to the channel so you won't miss any of my new videos. Thanks for watching. See you in the next video. And remember to always be compounding. Take care.